Warren Buffett has always told us as investors and traders to be fearful when others are greedy. So with main news articles and everybody on the internet calling this Uptober, should we now be looking at signs for exhaustion? Well, of course, there are some in the S&P 500 and NASDAQ, and in today's video, we're going to be talking about those together. Also, what does Tom Lee say is going to happen over the next 3 months? Are we heading for a recession, or are things looking really good for a buy the dip style scenario? That and more coming up in today's show, along with our thoughts on this current massive short squeeze within China and, of course, opportunities on the horizon. Are we about to wake up the sleeping giant that's been sitting for 6 months? Well, there are a lot of things coming in October, so let's talk stocks, commodities, and cryptos. It's going to be a great one. I'll see you in just a moment. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be talking everything from the macro to, of course, the human psychology, and more importantly, the charts and the key levels we should be looking at. Speaking of human psychology, though, fear and greed indices, they're now starting to tick into the greed side again, and we're seeing this at points in the market, which makes sense. Now, of course, if your barista or taxi driver or anybody else starts to tell you that you should be getting into the market, that's always been one of those surefire signs of saying, well, maybe I need to be thinking the other way. And it brings us to the idea of whether we're in an extreme greed moment here in the markets, which could lean into a little bit of weakness inside of October. We already know that October is one of the most volatile periods of the year in US election points. And we also know that we're starting to see very good signs of a no landing for now. And I'll say for now because, of course, anyone that's been watching this channel would know that we're starting to look at, and we always have been looking at, the back end of 2025, maybe even 26 for problems in the economy. And this is a 3-month forward, 6-month forward look at here from Tom Lee's Fund Strat, basically showing that what we've seen so far when it comes to percentages from the no landing scenario is that you usually have 100% gains over the next 3 months and 6 months. Now, of course, we don't know that we're in a no landing scenario just yet, but it looks likely that based on what the Federal Reserve has done with a 50 basis point cut, based on the fact that the markets have looked at that structurally and started to push up, and of course now that China is increasing the stimulus, there could be different markets to look at over the next quarter and next 6 months. And I think this is a very exciting time if you're somebody looking for opportunity. Here's another good sign for the bulls in Q4. Of course, we talked about how we had 8 of the first 9 months coming in bullish. Now, whenever we've seen this in the past from Ryan Detrick here, you can see that the Q4 return has 100% of the time. These are big reads. 100% of the time in other similar situations during US election years being bullish into the fourth quarter. So basically that means that if we do see dips, in general, they will probably be bought up. Now, if you have a look at other October returns in years that aren't US elections over 1950 to 2023, only 60% of the time are they bullish, and 80% of the time, the rest of the year was bullish. So still pretty good stats in terms of the overall bulls. Now, why are we talking about October potentially being volatile? Well, historically, it has been. Historically, it's given us volatility. Sometimes it's given us the VIX peak, which we don't expect to see here because, of course, that was probably August in 2024. And it's a period of time where if you are starting to see signs of weakness, you want to be paying attention to it. October, we know, is the worst month of the year in these years, so we should be paying attention to it. We also cannot lose sight, though, of all of the bull reads that we've had in recent times. When we had the 50 basis point cut, the market obviously gapped up big time and made an all-time high. When that happens, again, this data from Optima shows that over the next 3 months in particular, we had a 100% return. Sound familiar? Well, it's because it's very similar to what Ryan's data shows as well. And also Wayne's data that we've shared before, the Wayne Whaley breadth thrust, the 7070 breadth thrust, all of these currently suggest that the market is in a trajectory towards more of the bull market side than the current recession within 12 months kind of period. Now, this is why it's very important to understand that you need to be following price action, following structure, following data like we do on this channel, and not following narratives. Narratives will get you in trouble, whereas realistically, when you're following the market and you're actually saying, what is the market telling me, it's much, much better. So, of course, we have to leave our opinions at the side over the next couple of months and particularly be looking at structure over the next 3 months to decide potentially what's going to happen the 9 months after that. Yes, markets will actually make these decisions because remember, they are forward-looking, and this is very important. Now, that hasn't changed Goldman Sachs, however, to now downgrading their S&P 500 level by the end of the year. I think they'll probably upgrade it, but at the moment it's sitting at 5,600. It sounds like they're trying to get some buy the dip style scenarios sitting in. But according to Mike Zaccardi here, who shared this chart, basically the S&P 500 Goldman Sachs year-end target is now set to 5,600. So they're saying that the market will go down. And of course, if it does, at the moment, the statistics are still quite on the side of the bulls. Now, speaking of bulls, this is a market where we've gone from bear bust to currently everybody saying, wow, look at China, it's amazing, we should have been in it. Now, of course, on the channel, we've been talking about this for quite a while, and it's paid off in a replication phase. In fact, this is probably one of the greatest learnings of 2024 on this channel because, as you know, we have gone against most of the crowd, most of the year, especially the last 6 months, where we've been specifically talking about how it looks like it's a basing bottom and that we've seen signs of stimulus coming through. Now, of course, does this mean that it's all peachy and everything's fantastic in China? No. But what this does mean is that China has gone down the line of the bazooka. Effectively, they've put in so much stimulus now, they cannot really not keep going. So there will be more and further stimulus, and probably what the market's going to do is it's going to short squeeze everybody like we're seeing right now. It's probably going to have a bit of a breather. They're going to stimulate it again. It's having a bit of a breather. They're going to stimulate it again. Now, does this mean you're bullish on it for the next 10 years or anything like that? I think that is to be determined. We've talked about, of course, the biggest issue there, which is demographics, and we'll continue to discuss that in the future. But have a look here at the HSI from macro charts. 10-day advanced decline, absolutely boosting. And the last time we saw these types of boosts, and this is why it's important to think about this, breadth boost up like this is pretty much over here and over here. And look what happened. Massive bull market, the end of the bear market. So these are significant 10-day advanced decline changes. And again, you might notice over here, we used it earlier in the year to really start to demonstrate that we wanted to be net bullish when it came to these markets. A great chart, fantastic, love it. I hope you enjoy it as well. Make sure to subscribe to the channel, guys. We're bringing some fire at the moment, and I actually was doing the Monday stream, and it was awesome to see so many people loving 2024 in different ways. Maybe it was gold, maybe it was the Chinese stocks, maybe it was just that you were bullish on the US market, or maybe you picked up the dip during August when everyone was freaking out. And of course, we did the live stream and we talked about keeping a great mind. I'll actually just say something here because we did mention it in our live stream at that August period. Everybody says that they're going to buy the dip. And I remember during that day, because of course NVDA went down to the low 90s, and everybody was like, oh, it's all going to crash. It's going to go $60. And remember, the thing is that if we'd asked you, anybody out there, 3-4 weeks ago, would you buy NVIDIA at 95? You all would have said yes. And then when it came the day to actually make that decision, most people couldn't pull a trigger. You must have plans, you must implement those plans, and you must be patient. Remember, we talk about temperament and patience, react, don't predict, becoming one of the best things in markets. If you expect that you've done the great work, when the time comes, when you've done the great work, you're able to implement your plan, whatever that might be. Now, we mentioned before that China probably has put in a bazooka underneath the economy that's significant. They're going to raise around 40 basis points here on the actual total GDP. But do remember, the reason the market's so bullish is twofold. One, it's squeezing everyone. Many short funds are absolutely just going bankrupt right now from a lot of sources I have. And at the same point in time, the GDP is, of course, going to improve. This is not enough. They're going to have to do more. And this is what most people believe is probably the beginning of a significant change in policy towards serious bazookas over the next 12 months. And yeah, we have to believe that that's what happened, of course, in America and several times, so it's probably going to work. Now let's move over to another story, though, because, of course, there are other economies and, more importantly, there are other subsection markets that are starting to heat up here for October. One of those has been our massive movements in, of course, metals. And specifically, we'll be talking about oil moving forward because this could get even more exciting into 25 from a commodities trading standpoint. But here's a good one. Christopher Bernard recently interviewed the CEO of NVDA and asked him if the AI race can be won without building more nuclear plants. We all know that, of course, AI in particular, or in this case, the beginning of AI, the computing power needs energy. And one of the reasons we've seen being so bullish on utilities has been an AI play / a potential late cycle play. And his response to this question was, it's impossible. So basically, it looks like we could be seeing the beginning of a uranium trade as well, which we'll talk about in a moment. Now, a lot of people are speculating that we may see reinflation with massive stimulus coming out of several central banks around the world, including the Federal Reserve and now the PBOC. We're going to have to wonder whether we're getting reinflation. Ultimately, it's going to come back to one thing, and that's going to be oil. So we need to watch oil, we need to pay attention to oil, but here is what traditionally has happened when we go through the Federal Reserve cutting cycles. Now let's talk, let's not talk China, we're going to talk crypto for a moment here, because I want to discuss the idea of whether we're going to see what many people are coining Uptober. Now, I don't think few people know about this. Most people seem to be sharing similar charts, and that is that October is a very bullish month historically for Bitcoin. Now, we have started to see some inflows, and I would note here that inflows, while they are strong, they're not as strong as necessarily we've seen in previous times. But inflows themselves are coming into the main three. You can see here Bitcoin, Ethereum in particular, grabbing all of the love, and that's not showing that alts have really started to trigger yet. But I think alts will come through if we do start to see Bitcoin through 68K. Now, there are some signs for why you might want to be bullish on Bitcoin. We've already talked about the big four central bank balance sheets starting to improve. Once we've started to go up on these cases, that has generally been fairly good and superseded these ideas of fairly large moves in Bitcoin. And remember, Bitcoin's now blasted through 6 months of doing nothing. So for a lot of people that were in it, they're kind of getting bored or even sick of it, and they don't believe the bullish rhetoric. Remember, I was pretty sure, and I'm going to go with you guys in the comments here because I asked you this on Monday, probably people that were in crypto were bullish in January and bullish in February and bullish in March and bullish in April and bullish in May and bullish in June and bullish in July, getting the picture here, and bullish in August and bullish in September. But that's not the way it was. Of course, it was bearish through some of this time. So the reason why this is important is because if everyone was bullish every single month, and well, most people, then if we had a bullish September, which we now, of course, did clean bullish, then generally that leads into a very strong end of year. So I think maybe there's a little bit of fatigue there in terms of the bull calls. Of course, we do believe here on the channel that statistically anyway, things are starting to improve. You can see here what happens in September, what tends to happen in October as we lead into it with this Optima data. And of course, we've talked about that quite a few times. We also saw some dark pools about 2 weeks ago coming into coin and also coming into one of the Bitcoin ETFs, which since that point have actually increased. Let's talk dark pool liquidity. We'll come back to, of course, crypto in a moment when we look at Bitcoin on the charts near the end of the show. But I want to just quickly discuss these dark pool liquidity trades. Remember, they don't have to initially instantly sell off or anything like that, even if they are sells. The markets work in different ways to what a retail trader would. A retail trader buys or sells and they expect instant gratification. A market participant will slowly rotate into something and pull their positions out. So we can see here that serious ETFs are getting serious trades on them. But have a look here at the VOO. This is one that we brought up in our previous video. Have a look at these trades. We just got a big one into the close. As the market rallied in, we got another large transaction. And this marks so many large transactions. Now, it could be that it's profit taking. It could be the end of the quarter. It could be just the OPEX. Who knows? But there are so many large trades now coming through some of these massive ETF positions in the major indices. And this is giving us some interesting cause for concern when it comes to the temporary top here that may be in the markets. We have to look for price action. The market actually came down to a very important level over the last 24 hours and rejected through that. And around here is going to be, if you're going to see weakness, this is kind of where it needs to come in. Weakness would have to come in here. You probably wouldn't want another high. If you do get another high, then you're going to start leading into needing a Wyckoff style pattern. When it comes to sector rotation, before we jump into the charts and the flows, you'll notice here the last 24 hours was pretty much just a little bit of the laggards starting to pick up. Energy in particular was interesting there. We saw some weakness in gold, which we kind of expect at this point. Gold's had a great run. Now it probably goes sideways as Goldman Sachs upgrade their levels and everybody else starts to get on that wagon. We have to, of course, expect sideways sometimes. And XME is now not the number one for the last 5 days. In fact, solar and clean energy are. And these ones will be very, I would say, political. So you'll have to see how everything plays out for solar and clean energy. But the rest of the market, of course, rotating a little bit into, I would say, the general kind of possible reinflation play as well. And that's, of course, a discussion point that we'll have to have here over the next 3 months. We all know what happened in the 70s, and there are a lot of things and points and signs going towards maybe a mini 70s style position here in the markets. Now, we do have signs of exhaustion. As we mentioned, everybody's saying October, everything's fantastic. But we are starting to see signs that would usually give us a pullback in time or low growth at this period. And this is because we had such a great movement up, such an aggressive move up. We have to do what we call a pullback in time, which is a sideways market or even a bit of a drop. Now, do I think those drops are going to be purchased up? At this point, based on the data, we'd have to say yes. A very interesting zone will be around 5,600 to 5,620. And as we'll demonstrate in a moment, options kind of agree with that as well. But whenever we see these types of points, you usually get sideways market action before breakouts, or you get decent sell-offs like we've had in previous times. So I wouldn't have too much FOMO. I think there's definitely opportunities out there. These are the updated options high and low levels. You'll see the market is trying to push that new all-time high here in the futures. And you'll also see how it interacted around that 57.10 level what we had. So this is, of course, that level that was heavily traded. A few of you guys were buying off this. I don't blame you. It's certainly the first bull level if you were day trading. Obviously, I had here day trade bear zone because the reaction around here, let's say it had actually flogged through and gone lower and actually closed below, then rallies would probably be met by sell demand. So it's very close to call. VOO, of course, we know large transactions effectively here and here. So what would happen at the moment is if we went underneath this little low here, maybe day traders and scalpers would see that as bearish, even though the market is predominantly still making, of course, on higher time frames, a series of higher highs and higher lows. Day traders, scalpers, they'll certainly be watching. Swing traders will need more information. Let's go why it's so important where we keep closing. Well, we keep closing right in that 57.50, 57.60 zone. We know this is where all the options calls lie, and effectively the change from what I would say is neutral or just slight positive gamma to extreme positive gamma seems to lie through. So as we move now to the 2nd of October, obviously we're on the 1st still, but the 2nd of October, have a look here that suddenly the call strike becomes lower. Now, if the market doesn't want to start blitzing to the way up, it's going to try to want to sell underneath this because there's a lot of calls here at 5,700, 5,710. And we also see here that if the market does remain quite bullish, it's going to need to try gravitate towards 5,780 to maybe even 5,800. So I think the next 24 hours is going to tell us a little bit about market structure. You can see here where the call walls are. You can also see that we'd be in positive gamma if we were able to hold up over the next 24 hours. So it could be a very interesting day of trade. NASDAQ CTAs have been dropping a little bit, even though we made that new high, which is an interesting point. We mentioned that a few times recently. And Brent CTAs, I still think are doing a pretty good job of purchasing up off these lows. So a very important point for Brent. We'll go through that in a moment. So of course, yes, oil is looking pretty interesting. Now let's move over to NVDA. NVDA continues to struggle around the 120, 125 space. No surprises. I think until it gets through 125, which we'll look at in the charts, you wouldn't really want to be hugely new bull positions on it because I think that it looks more weak than strong until we get through that level. Now, what about Tesla? Well, this is one that's coming into the 10-10 event. We know October 10th is a very important point for it. And at the moment, it's buying the hype and buying the rumor a little bit. You can see here 260, a very important level. We keep kind of hovering and just barely closing above it. 270, 280 is where our target is based on the inverse head and shoulders. And at the moment, it seems to be working. So, of course, could we go all the way to 300? Yes, we could. And we will continue to monitor that situation. Now, let's jump into the charts and take a look here to begin with uranium. Now, you might say, why are we looking at uranium? Well, of course, NVIDIA CEO told us to. So why wouldn't we go and look at uranium? Now, this will be an interesting conundrum in the world because most of the places in the world don't have enough energy to potentially deal with the computing power of AI. And this is a discussion point that a lot of people have had. Because we've underinvested in it, most Western democracies in particular, this may be the choice. Now, you may agree or disagree or not like it, doesn't really matter. The reality is we're starting to see double bottom patterns. We're starting to see an improvement here in something that was a big storyline for 2023 and, of course, has now become not so much a storyline in 2024. It's actually been sitting now at the exact same price since 2021, which I find a very interesting point here. So could it be time for uranium? Let us know in the comments down below. We're starting to see some pickup here. It's not as easy a trade as some of the other things are, but I thought I'd bring it up and we'll kind of follow this along moving forward. Let's talk about US dollar, putting resistance pressure on again. Here's the anchored VWAP. Obviously, daily 20 will be all important. it continues to find some strange consolidation down here. If I look at small time frames, you could make an argument for a breakout high soon. I'm going to go with neutral on the dollar on the medium short term at this stage. Copper, weakness here, guys. So you can see copper went ballistic, way too overbought. It had to come back down. So copper could find some buyers around 447. It may even return back to 433. So I think that's probably the area I'd be looking at now for copper. It was a great trade up. It was fantastic. It showed us pretty much what China was going to do before they did it. And the same with iron ore. And iron ore has been a really good play. Why? Because iron ore is a pseudo proxy for China and China's growth. So if you didn't want to trade, let's say, Chinese stocks, you could have traded iron ore stocks. And we made a big point about this in our private community, and we talked about this synergy. And have a look at that. What a blitz. Absolutely, beautiful TA here. Really nice setups, really replicable setups as per our day trading course. And iron ore absolutely going ballistic. And of course, people looking at Rio and others for that. Gold looks like it's going to take a breather here. We're getting some stop signs on this indicator. We're getting a little bit of weakness here coming through on the markets. And this is the type of sign that we've had before, and we kind of just go with consolidation for a period. So gold's getting a lot of bull rap. We love gold. Of course, we think it's going over $3,000 an ounce. We've talked about this since 1,800 an ounce together. And at this stage, I would just think it's having a bit of a breather, and it needs to. Silver is the same. However, silver's playing catch up. So if silver gets through 32.30-ish, then we're going to have to think about 34.50. And this is going to be that next level. So I like silver. We're looking, but we don't see a new flow-on effect just yet. We mentioned oil. Now, oil is it's a good chart. It's a very interesting chart. So small time frame, I could see why someone would have been bullish on the Monday open. We talked about that being where day traders were. That was literally that point there. In terms of downward trend line, you can see here the trend line is significant and beautiful. If it does manage to breach up on that, very good signs of a basing form on US oil for swing traders. At the moment, day trade buyers probably really should be looking more at 70 unless you know your own risks. But this may be the low. These may be the lows here for day traders. And it's certainly looking more bottomy than it has for a little while. So, of course, the whole way down, not really great buying. Potentially here, we might be seeing a bit of a turn point for oil. So if the market starts to sniff reinflation due to stim, then that could be one of the storylines. Tesla 260, we know, of course, we breach through and we start getting heated. 280 or even 300 become open. And we've talked about the inverse head and shoulders many, many times over. NVDA struggling at the downward trend line, which we can see here, 125, 126, and it's coming back and it's kind of floating around. That's fine, all good. New kind of big trades, though, won't come in, I think, till 129. That's when we'll start to see significant positive gamma flow. We'll talk about that when it occurs. HSI, it's a short squeeze. This is typical China, typical Asian markets 101. When they go ballistic, they go ballistic. This is most funds saying, yep, you know what, this is the type of stimulus that cannot be stopped, as in they're just going to keep stimulating the economy. And of course, it's one of the biggest returns. I think it's now overtaken the S&P. So if you look at 30-ish% here from the Hang Seng. So some significant stuff, may stop at 22K, but yeah, I don't want to call where it's going to stop just yet. Oz 200 keeps climbing up higher and higher and higher with a series of higher lows, still bullish at this stage. US 2K tells us still to be partially cautious within the S&P 500 and NASDAQ. You'll notice here it hasn't broken out. This will be most likely a good opportunity. If it just kind of sits here and has a pullback in time, floats around for a little while and then breaches out, that will be a fantastic spring-based trade. So if we get a coil into a break, then of course we'll talk about it together. For now, it's just neutral, I would say. NASDAQ, again, starting to see signs of a little bit of weakness. May go to 20,400 first, then possibly turn over. 19.4, good level for people to look at, and then maybe even lower if we do get a little bit of sell in October, which usually happens somewhere, I believe, before the 15th generally. So it'd be this next couple of weeks, generally speaking, if you're talking statistics. Let's now talk about Bitcoin. Great zone. I say it's a likely hold zone. Now, this was exactly where we were during the open of the previous session. We've actually structured up here a little bit. We've got a couple of little interesting potential signs of strength that could come back in. At the moment, it's at the most traded level. It's at a pretty good zone for bulls. Bulls don't really want it to go lower. If it does, it needs to find instant buying. But yes, some good little weird day trading going on here on crypto. And of course, the inflows are starting to come back through. Ethereum also starting to put pressure on finding that demand. We'll see whether it can get through that bull zone number 1 and really signify a nice turn event here, because Ethereum is quite low from where it has been. Obviously, Bitcoin, we need to see 68,000 broken to really start to get those bulls and everyone hyped on board and the flows coming back in. But still, structure-wise, it's improving. Now, let's move through the news. ISM manufacturing PMI on Tuesday, 10 a.m. A lot of people talking about the docs and stuff. Don't worry about it, guys. It's just a temporary blip. You cannot figure out what that's going to price into the market. It's just the way. It's no point thinking about it, wasting your brain space on it for now. ADP non-farm employment change, obviously something that people look at, but really it's the main one, which is not the PMI, but the non-farm payrolls, which is on Friday at 8:30 a.m. So I just wanted to say something here, like I said in the live stream, which was, of course, there are members of our community that have been ravaged by this horrible Hurricane Helene. People also have family members and friends that have been ravaged by this particular devastating storm. And I think we all wish you guys a speedy recovery. Hopefully you have no family and friends that are missing. We actually had a story from somebody in our live stream where they had multiple friends that they still didn't know where they were. So let's hope that they're found safe and sound over the next coming days. And of course, the devastation is real. So if you can help people, make sure to do it. I had some other stories coming in where people had some great houses that were secured for this type of thing, and they invited people in their community and friends and family to come and shelter there. So it's always amazing to see people do this and help others out. And I just wanted to give them a shout out, and at the same time say that, of course, we are thinking of you. Even though I'm in Australia here and everybody else is all around the world, I'm sure as a community we do think about you guys. So yeah, hopefully you're all doing well, and we'll see you in the next video. Bye for now, guys. Catch ya.